So April 2022, question 4B, allow me to read. It says, on 1st of April 2021, Riziki Limited acquired 75% of the equity shares of Salama when the retained earnings of Salama stood at 234. The acquisition consideration consisted of cash amounting to 510 million and share exchange on the basis of 2 shares of Riziki for every 3 ordinary shares acquired in Salama. The market value of Riziki Limited shares as at 1st April 2021 was 16 per share. No accounting entries have been made in respect of the share exchange consideration. No problem. No problem. So they acquired by paying some cash. Then later on, they gave out some shares. We'll see what happens. Additional information. The fair value of Salama net assets approximated their carrying amounts with exemption of a specialized piece of equipment which had a fair value of shillings 120 million in excess of its carrying amount. This equipment had a 10-year remaining useful life. So what is that, students? That note 1 is about what? So what is that? Someone? That note 1 is talking about what?
Revaluation.
Revaluation, correct. So that is about revaluation. Any moment they talk of carrying amount being excess or just carrying amount being different with fair value, then that one they are talking of revaluation. So no problem, we deal with it. It is the group's policy to value the non-controlling interests at fair value at the date of acquisition. Correct? The fair value of the non-controlling interest in Salama Limited was estimated at 144 million. So we have been given the fair value of minority. So which method are we going to use to calculate goodwill? Goodwill will be based on which method?
Full method.
Will be based on the full method. So whenever you are given the fair value of NCI, then you use full method. Full method is whereby you bring the purchase consideration, then you add the fair value of the minority. Number 3, during the year, Salama Limited sold goods to Riziki for 64 million, earning a gross margin of 25% on the sales. Riziki Limited still held 48 million worth of these goods in the inventory. So up to that point, Jemima, what do you think the examiner wants us to calculate up to that stage? Where they're saying during the year, Salama sold goods to Riziki for 64 million, earning a gross margin of 25% on sales. Riziki still held 48 of these goods. Yes, Jemima, UPI, correct. So the examiner wants us to calculate the unrealized profit on inventory. That is true. Riziki Limited, trade payables, Salama Limited still had the full invoice value of 64 in trade receivables. However, Riziki Limited trade payable showed 34 as it had made a payment of 30. So naona tunaendelea vizuri. So I want to ask Hassan, the 64, there is the 64 and 34, that is intergroup debts. So that variation, there is that variation of 30. How do we consider that 30 in the, because this one was saying the debt is 64, this other one is saying it should be 34, and the difference of that, the difference was 30. So the 30 we treat it as what? Ishara?
Cash in transit.
Yes? Hassan? You can type that difference of 30 is treated as payables, no?
Cash in transit.
Cash in transit, yes. So Bishar, hapo umelala kidogo, kama nimekupata off guard. When there is a variation in the intergroup debts, then that variation is considered to be cash in what? Transit. Correct. Number 4, on 1st of April 2021, Riziki Limited also acquired 30% equity interest in Amua Limited for 65 million in cash. Amua Limited sustained heavy losses over the last few years, and Riziki Limited hoped it will turn it around through its significant influence over Amua Limited. In the year 2022, Amua Limited made a loss of 150. So this company, on the way, they acquired another company to the tune of 30%. A company whereby the parent is owning 30%. Let me look for someone, please, at least you engage Watu. So I'm just checking randomly. Patience, where the parent owns 30%, that investee is known as, to the group, how do we call that investment company? In the group? Patience, 30% shareholdings. How do we call that investment in the group? Patience associates, that is correct. Associate starts from what percentage, Sarah? 20 to 49, correct. I'm loving the participation today. 5, impairment test performed on 31st March 2022 revealed that the investment in Amua had been impaired by 5 million due to sustained trading losses. However, no impairment was required in respect of goodwill arising on acquisition of Salama. No problem. Required, determine the value of investment in Amua. Calculate the value of goodwill arising on acquisition of Salama. Then consolidated statement of financial position for Riziki Group. Sawa. Now, listen again. In associate and joint arrangement, in balance sheet, they only appear once. You only bring your investment. You are not supposed to consolidate. You know, associate, you have small shareholdings. So you cannot start telling them, the way I was telling you, can share Safaricom. You cannot start telling Safaricom, I'm preparing my balance sheet, and I need to combine my motor vehicle plus the ones you have. You are the minority there. So what you do, you just wait. How much did you invest there? I invested 1 million. Did they make profit after you acquired them? Yes, top up that profit. Did they make a loss? Yes, less that loss. Then you get your current what? Investment. I hope that is clear. So that investment is what the examiner wants us to get. So right there. So we want to determine the value of investment. So Roman number 1, value of investment, in Amua Limited. You can only be asked investment in associate or joint arrangement, no subsidiary. So it is high time you should know how to calculate it. Value of investment in Amua Limited. Shillings are in thousands. So can you check note number 4? Check note 4. On 1st April 2021, that is the beginning of this year, because this year ends on 31st March 2022. So it must start on 1st April 2021. So Riziki also acquired 30% equity interest in Amua for 65 million in what? In cash. So initial investment, they invested how much? 65. Then after that, after acquisition, any profit which comes in that company, Riziki will take 30%. If it's a loss, they will also bear 30%. So continue reading. Amua Limited sustained heavy losses over the last few years, and Riziki Limited hoped it will turn it around through its significant influence of Amua Limited. In the year 2022, when we are closing, Amua Limited made a loss of how much? 150. So less post-acquisition loss. So post-acquisition loss, they made a loss of 150. So Riziki will not suffer the whole loss. Riziki will only suffer to the tune of 30%. So what is 30% of that value? 5. So you top up, you less. Then continue reading. Number 5, impairment test performed revealed that the investment in Amua, this investment of 65, had been impaired by how much? 5 million. So the investment, if we invest at in the Misa. Imagine you just invest on the loss, kidogo impairment. So less impairment loss. They made impairment, they incurred impairment of how much? 5. Therefore, our investment right now, which will go even to the balance sheet, will be how much? 15. And that one awards us how many marks? 3. So 1, 2, 3. Any question? No question. Let's go to Roman 2. Let's go to Roman 2. Let's go to Roman 2. Roman 2, what do they want? They want the value of goodwill arising on acquisition of Salama. Sure. So goodwill. Goodwill on acquisition of who? Salama Limited. So what is the formula for calculating goodwill? You take the purchase consideration first, then you less the share of net assets. Net assets are the equity components. So let's start with the purchase consideration. So have here shillings 3,000. So check the paragraph 1 where the question started. On first this, Riziki acquired 75 equity shares in Salama when the retained earnings of Salama was 234. The acquisition consideration consisted of cash. So right here, purchase consideration consideration, purchase consideration, cash. Cash, they are saying how much? 510. Bring it in this first column. This was 510. Continue reading. And share exchange on the basis of 2 ordinary shares of Riziki Limited for every 3 ordinary shares acquired in Salama. They gave them shares. So shares, they were giving on what basis? They were giving 2 shares for every 3 acquired. But they acquired how many shares? 75%. So can you check the equity of Riziki of Salama? You check how many ordinary share capital was appearing there. Ordinary share capital appearing there. It is 300 divided by par value. So because this is 2 shares for every 3 shares, so it is 300 divided by par value of 10 to get the number of shares. Then they gave them those shares at what market price? They gave them the market value of Riziki was 16. I hope you've understood that. They gave them 2 shares for every 3 acquired, but they acquired 75% of this. I'm dividing by 10 to get the number of shares. Times that one there. How much? To 40,000. So what parent invested? Add the 2. Parent invested how much? 700 and what? 50. What was the fair value of NCI? Fair value of NCI. That was mentioned in note number. Check additional information number 1. No. Number 2. It is the group's policy to value non-controlling interest, 144. 144. So that one will give us 894. Then you less net assets acquired. So less net assets acquired. Net assets acquired. So net assets acquired, you go for equity components. Ordinary share capital, share premium, retained earnings, revaluation. So can you go to equity? There is ordinary share capital. So ordinary share capital. Ordinary share capital. How much is this? 300. 300. Retained earnings and revaluation. I told you we use the ones on the date of acquisition. You know, shares in Akwanga, but revaluation and retained earnings keeps on changing. So you go for the date of acquisition. Goodwill should be computed on the date of acquisition. So you come here and say retained earnings, check paragraph 1 where the question started. How much was the retained earnings? 234. 234. Then there was revaluation, the fair value uplift in note number 1, which was 120. So revaluation or fair value uplift, revaluation in note 1, that is 120. So can you add? So you don't apportion. If it was partial means there was no fair value of NCI. You take this, but you take what percentage? 75. But this is full. Full means you have brought NCI you will not apportion this. You just add the way they are, and you subtract. So kindly add.
Sometimes when the fair value in excess carry in excess, sometimes it is less.
Wanasemanga carrying amount is less than fair value, but the revaluation gain. Carrying amount being less, fair value being in excess is one the same thing. Hmm? 654. So how much is goodwill? The difference is goodwill. Indicate down there. I don't have space. Goodwill. So goodwill is 240. Then they say it was not impaired. Yeah, there was no impairment for Salama. So that is it. Giving us how many marks? 3 marks. It's okay. But all those things will 1, 2, 3, 4, 5, and whatever. So that is gone. Then they want us to prepare consolidated statement of financial position. Consolidated statement of financial position. So right there, Riziki Group. You write the name of the parent, or is there someone with a question up to where we have reached? About right? March. So non-current assets, tufuate tu hiyo yao, si ndio? So hiyo yao ni PPE. So property, plant and equipment, you add. So this is 1595, 300 plus 636. 400. You remember there was revaluation? Yes. Check note 1. The fair value of assets approximated, the excess was 120, but it was supposed to be depreciated. Sure. Yes, it's supposed to be depreciated. Over how many years? Over 10. So there's a way I want to do it. I hope you will understand. Check, that 120 is supposed to be depreciated for 10. So we are in which year since we acquired Salama? No, Rizik, yeah, Salama. When was Salama acquired? 1st April 2021 is exactly the beginning of this year. So Salama is 1 year subsidiary. So it means this year we have only depreciated it for 1 year. Sure. So it means, okay, there are two ways. There's something I want to do. I want to say 120 times 9 over 10. 9 over 10 to me, you know, it is depreciating for 10 years. So this year we have depreciated 1 year. So either you can do this 120 minus the depreciation 120 divided by what? By 10. But you see now by 10 that is 1 year. So it means the asset is remaining for 9. So you can take 9 over 10 or you subtract this. It will give you the same answer. So yes. So the 9 over 10 means the value of the asset which is remaining is for 9 years because it has depreciated for 1 year. Whichever you want. Whichever you want. So give me that answer, assuming you have understood. How much? Wait, I'm waiting for the answers.
233.
What are you from online? Online, someone to give me an answer? Am I Vatican?
233.
233 9700.
9700. Yeah.
I hope the 9 over 10 is not confusing. Eh? Yes, you know when they're depreciating, you're supposed to subtract accumulated depreciation. But now you see it has only depreciated for 1 year. You know 120 divided by 10 is like times 1 over 10. So 1 over 10 is gone, meaning we are remaining with 9 over 10 to save time. Proceed. Proceed. Investment. So investment, what we invested in the subsidiary, you replace with goodwill. You replace with goodwill. So subsidiary, goodwill will cost how much? 240. Then associates, you bring their investment in associates. Investment in associates, the one which we have determined here, this one. We have gotten 15. Gotten 15. So you see this 575 investment, you know how they got it? That's the 575, they got it this way. They took investment in associates of 65. Then they added investment, which this company invested in the cash of 510. So 510 plus that, they got that. But whatever you have invested internally should not go to consolidation. So company subsidiary, you replace with goodwill. If it is an associate or joint arrangement, you bring the investment which you have adjusted. So give us this total. Give us that total. You get 294,700. Current assets. Now, what are you now? Current assets, we have inventory. Okay. Inventory. Add what plus what? 165 plus 160. What are we supposed to subtract from inventory? UPI. Unrealized profit. We are supposed to subtract the unrealized profit. So unrealized profit we will get through note number 3. Yes. Through note 3, check note number 3. So in note 3, during the year, Salama sold goods to Riziki for 64, earning a gross profit margin of 25. So have a working outside here. So UPI will be profit margin, 25% on sales. On sales is margin. But if they said on cost is markup. So we had to convert the markup into margin. But this one we don't convert because it is already on sales. So 25% times the goods which remained unsold. How much remained unsold? 40 what? 48. So 25% of 48, that is 24, that is 12. Yeah, this is 12. So that is the unrealized profit on inventory. So come and subtract it here. So you subtract 12. 313. 313. I hope that is clear. 313. Then we go to trade receivables. So trade receivables. Receivables, you add the receivables. Receivables 247, 100 plus 107, 800 minus intergroup debts. Intergroup debts. The correct intergroup debt was how much? 34. Because this other person had already paid. So the correct intergroup debt was 34. Then there is cash in what? Transit. So when the cash is in transit, then you eliminate it again from receivable, because receivable is what you are expecting to receive, but already you have been paid. The only issue, you have not received the cash. Maybe it is on the way coming. So you subtract the cash in transit, which was how much? 30. So please indicate in your books, this is the intergroup debts, the 34. Then 30 is the cash in transit. They are in the same notes. So kindly get for me that answer. Right. 290, 900. Okay, 290, 900. I hope that is confirmed. Sawa. Then bank. Bank, you add 21, plus 13,800 plus cash in transit. Sure. Yes, the cash in transit, you subtract receivable, but you add it to the cash book. So plus the 30. So that is the CIT, the cash in transit. So can you adjust that? 64? 800. So give us total assets. We are done with the total consolidated assets. So total assets. Total assets is how much? Total is how much? 3263 400. Online, we are getting the same answer. Online, are we getting the same answer? One person can confirm. In online, it's sensitive. You have to keep on checking whether they are there. Esther's confirmed. So that is okay. That is okay. That is okay. So equity and liabilities. Equity and liabilities. Equity and liabilities. Equity and liabilities. We have ordinary share capital. Ordinary share capital. So ordinary share capital, I told you in the other question, ordinary and share premium, you only go for parent only. So, but in this question, there are some shares. Okay, fine, I'll still go for parent only. But there are some shares parent gave out to acquire that company. You remember the 2 for every 3. So those ones you will add. So you take parent only is 800 and what? 50 plus the ones the parent gave. Parent gave, they were giving 2 for every 3 of what they acquired. They acquired 75% of 300. So these are the shares parent gave. But now you have to be very cautious. In share capital account, please stop what you are doing. You listen to this. This is sensitive. In ordinary share capital account, in accounting, you don't post any value which is more than the par value. Like in this case, the par value is, check the value of those ordinary. The par value is how much? 10. Is 10. But parent gave out at what? 16. So if the shares have been given out at an excess amount, excess means over and above the par value, then that excess, we create another account called share premium. The excess goes to the premium account. So here you are not allowed to capture more than the par value. So here you multiply by 10. Then you create another account down here. You call it share premium. So share premium was not there before. So it is 2 for 3, 75% of 300 times the excess amount of how much? 6. So the amount which is over the par value, you take it to the premium account, while the par value goes to the ordinary share capital account. I hope you understand that. But if there was no issue of shares, then here in the consolidated, I would have gone for how much? I would have gone for 850. You only pick the shares for the parent. So I would have captured 850. But now parent again gave some shares, you have to add. Because the shares are walipeana, so you top them. Give me the 2. Patients, ordinary shares, ngapi? Ama unaandika nini? Naona tu yes. Ama yes means what? Watu wakisema yes. 1 million. Patients is saying ordinary shares is 1 million. Yeah, roughly, because B plus 850. Ngapi? It is 1 million. Someone to confirm? For ordinary shares, 1 million. Me confirm. 1 2/3 of 75 of this times 10 plus 850 surely. Kwani ngumu hiyo? Does it even take people seconds? Elijah, mnapata ngapi hapo? Dorothy, Bishara, Jemima, Mary, Muli, mnapata ngapi hapo? Ida, umenyamaza tu hapo. What do you get? Abigail, Esther, people are just quiet. 23. Hey, na wewe 1 million umetoka nayo wapi? Oh, you know, the 3 was supposed to be divided by 10. I think that's where the problem is. You know, to get the number of shares, you know, this one is already in shillings. So again, we can't multiply with that. So it will be 300. So other, see, so it's just 300. It's 300 times 75% times 2 divided by 3. 150. 150 plus 850 is 1 million. The 300,000 were already in shillings. So you want to divide by the power value, which is 10, then again you multiply with the 10. So in a cancel. So that is 1 million. Then this other one. So even this one, make sure you divide by shillings what? 10. First to get the number of shares. So 75% times 30 times 6 times 2 divided by 3. 90. So this one is 90. Then retained earnings. Retained earnings, those are workings which can wait. They are serious workings. They can wait. Ikiwa na non-controlling what? Non-controlling interest. NCI. These ones can wait. Those two can wait. Proceed.
Excuse me.
Yes, somebody.
Excuse me.
Yes, Ponga.
It is 2/3 share premium. I'm getting 192. 240 divide by 240,000 divide by 10 multiply by 16 multiply by 75% times 2/3.
What are you even doing?
Not getting 9.
Share premium should be 6. Where are you getting 16?
Oh,
Because total was 16, but 10 went to the ordinary. So excess is what goes to the premium account, which is 6. Is that okay now?
yeah.
Good. Then we go to non-current liabilities. Non-current liabilities, 8% redeemable. Redeemable preference shares, 8% redeemable preference shares. So add the two. The 2 is 460 plus 40. 460 plus 40, that is how much? 500. So that is 500. Then current liabilities. Current liabilities. Current liabilities, payables. Payables, you take 442 plus 167, 200 minus intergroup debts, 34. The intergroup debt, I hope you recall 34. So intergroup debt, you subtract both from receivable and payables. So minus 34. What do you get? 575, 200. 575, 200. Then payables, current tax. So current tax, that one you just add. 108 plus 52, 800. What do you get? 160, 800. So let's assume that total equity and liabilities will be the same as our total assets. 32, 63, 400. Good, good. So can we have workings? for the remaining two. You can have the workings for the remaining two, then we are done. So let's start with NCI. So have NCI's equity. We want to know how much is the capital of the minority. The capital of the minority. NCI's equity. What was the fair value, market value of NCI when they were on the date of acquisition? Fair value on acquisition. It was mentioned in note 2. On the acquisition, minority had a value of how much? 144. So have that 144. Then you add post-acquisition profit. Any profit that company will make after acquisition, you will give NCI 25%. Because parent was controlling what percentage? 75. So you'll give them 25% of that profit. So how much profit did this company make after acquisition? Simple, very simple. This company was acquired here exactly at the beginning. How much was their profit on the date of acquisition when they were acquired? Check paragraph 1. The retained earnings on the date of acquisition. I just want to check whether we are together. Let me just pick someone online randomly. Ida, Leo Menyamaza. So Ida, how much is the profit on the date of acquisition, which you can be able to see? On the date of acquisition of that subsidiary, their profit was how much? How much was the profit, Ida, which you can be able to see with your own eyes? How much was the profit on the date of acquisition? Ida. You cannot come out like that. Ida, we are waiting for you. The profit when retained earnings when we acquire, our Ida is not there. Ida is not there. Any other person? If Ida, maybe Amanda, Kunywa Chai. Any other person? What was the profit on the date of acquisition?
$34 million.
Esther, Richard, 234, yes. So on the date of acquisition, the profit was 234. When they closed the year, check the balance sheet. How much is the retained earnings in the balance sheet of Salama? 358. So when we acquired them, their profit was 234. Now the profit is 358. So post-acquisition is the profit they made after acquisition. They increase from here to here. You give minority 25%. So you will say post-acquisition profit, it will be 25% in bracket 358 minus 234. Then what you get, take 25%. What you get, take 25%. I don't know. So I'm told that is 31,000. Then so there was depreciation. So you less that depreciation will affect profits. So less depreciation. Depreciation was how much? Depreciation was what over what? 120 over 10 years, but minority will suffer what percentage? 25. Yes. That one comes to how much? 3,000. So that one you reduce. I would have reduced unrealized profits, but who sold to who? You only subtract when the subsidiary is the one who sold. Here the sales came from parent, so you don't subtract. I will also have subtracted impairment because actually it was full method, but there was no impairment in Salama. So how much is the adjusted equity? So that we give minority, not even adjusted, that is the value of minority. Their fair value 144, post-acquisition, they have been given 25, then depreciation, they will suffer 3. So they should be talking about how much? How much? 1? Okay, this one. 172. 172. So, I'm a UPI. Who sold to who? Because someone is. Who sold to who those goods? You can. Ngoja kwanza. Who sold to who? It is Salama. Then please, I'm sorry for that. Salama is the one who sold. That is what we call upstream. If Salama sold, then the profit of Salama will be affected because they are the people who had captured the profits. So their profit will be affected. I thought it was the other way around. You know, if it is the parent, you know, the seller is the one who recognizes profits. So here Salama is the one who sold. Sorry for that. So you will subtract UPI. UPI tulipata ngapi? 12, yeah. UPI we got 12, but LCI will not suffer the whole amount. They will suffer what tune? 25. Sorry for that. So punguza hiyo. So 12,000 by 25. 3,000. So of what you got, can you reduce? It was 172. Reduce by 3, you get 160, 169. So take.
So when you come to the depreciation, we want to calculate for the 9 years. So you calculate for.
It's only 1 year. Yes. You know, if you are checking the value of the asset remaining, but this is depreciation for yes. So bring here 169. I want the balancing figure before we confirm to go to retained earnings. Dorothy, someone wants to give the figure. Dorothy, I want you to give me this figure, the balancing figure as retained earnings. The rest can confirm, then we do our working. So Dorothy, I'm waiting for the retained earnings figure from you.
$768,400.
So from Dorothy is saying 7, confirm Dorothy's answers. She's saying 768,400. You have the same. Kwani confirm ulikuwa na ngoja answer yake, sio pia ulikuwa unafanya yako. Anybody can confirm Elijah 768,400, then that is confirmed. So 768. Sema tu yako ni tofauti, si ati confirm. Umepata hivyo? So let's do a working to confirm if it is true that retained earnings is that figure. Is that figure. So have a working. I want to delete here for NCI. Mute yourself, Dorothy. So retained earnings. Retained earnings. How much is the retained earnings for Riziki in the balance sheet? Riziki in the balance sheet? 743,400. Then you add post-acquisition profits of Salama. Salama, you will take the profit they made after acquisition. So parent will take 75% of that profit. Minority has taken 25. So I remember it is 358 minus 230 what? 234. The profit which they made after acquisition. So get that difference, then you take 75%. So that is 358 minus 234 by 75. 90 what? 93. Then you less depreciation. So depreciation is what? 120 over 10, take 75. Parent goes with 75. So that is 12 by 75, 9. Less UPI. UPI was also 12 12 by 75. That is another 9. So, then impairment. There was impairment. No, before impairment, less loss. There was post-acquisition loss in AMUA. So it was 15. No? Post-acquisition loss in AMUA.
150.
150. So post-acquisition loss, AMUA, 150. But 150, you take what percentage? 30, correct. In AMUA, we were controlling 30. So take 30% of that 150. 45, that is a loss. Then you less impairment. I don't have space, so wake up. Impairment, you don't apportion. You take the other amount because your investment is the one which was impaired. It was impaired by how much? 5. Question. Can you check whether you will get the answer which we got here as 768,400? If it's not balancing, then there is an issue. If it balances, then we are perfectly fine. Confirm. This plus this minus that minus the loss minus the impairment. This balancing online inaingiana na hiyo tulipata pale. This quite in order. Yes, so that is okay. That is okay. I want your honest judgment of this topic. Remember, this topic is compulsory. It is that bad. Unaweza toka bila Abigail.
Sijamaliza kuandika mwalimu.
The last part, eh?
Yes.
Andika mbio. Abigail, Isha, Dorothy, Elisha, Esther. Ida ulirudi, kuna time ulinyamaza. Jemima, Gitao, Muli, Patience. Hii ukipata kwa mtihani utaipata kwa mtihani. Unaweza lenga uwezi fanya anything useme that topic is not meant for it. It's not meant for you. Ama it is something you can try out. It is workable. Yeah, Bishad is saying this one he will try very well. So what I want you to check on speed tafadhali. Unaona kama hapa the ones you are supposed to ignore, unaona hiyo NCI na retained earnings. Those are complete waste of time. They will just waste your time. Na hiyo swali ulipita kitambo sana. So retained earnings, I'm leaving them. We are doing them in class because for 2 reasons. 1, class we must balance. That is 1. 2, in exam you can be told to calculate the value of NCI. So you see if it's required, at least kila mtu anajua ako hapo. Everyone is suffering. But now wewe umeenda kusuffer and people are getting so many easy things here. So if not required, then please don't go into that. So our next question is November 2017. Question 2B. November 2017, question 2B. I think I should release you for the holiday. Should I? Though mwalimu wa leo anakuja 8. It's coming at 8. So we shall do that question. Then we finalize with this is April 2022, so December 2021. So tutafanya hizo 2 remaining. So when we start this, we are not going to finish. We don't finish. When we meet in the next class, it will be chaotic. Mimi nimesahau figures. The people who are here are also, some are not there that day, some people are there, so it will give me just problems. So ideally it was to stop at 7:50, but now almost 7:40. We will do absolutely nothing. And I don't want to leave the question hanging. So you can attempt that question. It is called Mwanzo, Safari, and Upya. Yes, there is a good reason why I've selected that question. Yeah, there is a reason why I've selected that question. Ama, tufanye hivi. Can we read to find additional information? You know, here, if you realized, I never did the workings first. So, we never did, we were doing them at the same time with presentation. And that is what I encourage. Even when you kushindilia kwa workings, you'll be wasting time in exam because nobody will mark the workings. So, but now because time is not there, we can try to collect, collect some things so that in the next class we can get to move. So let's collect when 7:50 tatupata, we can stop at that stage.
Just the way you had said, mwalimu, let's just do it when you come, because doing it half then next time, let's just do it next time.
The problem I'm having, the next time we are meeting on Saturday in the evening, the turnout on Saturday evening is very high, and this question has something very sensitive in note number 1. Not 1%, the entire question, you are not given the percentages that the parent acquired in Safari au kupewa.
Excuse me, sir.
Yes.
I just concur with the one who said that we do it from No, I second it because when you see on us, when we start now, come Saturday, it will be another thing. You know,
people will forget.
We're doing it like as in you try to remember. You try to remember. We are not doing only a parade.
The issue is, will you be present?
Of course we come.
Of course we will be there.
You can solve when a holiday. So it seems holiday, but I still appreciate because at least I think the song to this extent. So the issue is that we were not given the percentages, but I hope mtakuja. If they bring you a question without percentage, how do you maneuver? That is why I've selected that question. Otherwise, there is no issue. So let's meet on Saturday in the evening. We progress. Those who are doing law, join back at 8. Mwalimu will be around. So thank you. Do have a nice holiday, and we shall meet God willing. And thank you also for creating time to join class. Thank you.